Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, April 7, 2015. Inside the numbers tonight, we're going to talk a little bit about the case for trailing stops. Okay, there's a good example of why. We'll talk about the SPY and the E-mini contract. We'll do crude oil. We'll talk about the gold market, and we'll do interest rates and the bond market. Let's get started. So here's the case for trailing stops. So in this chart here, you can see from this high up at 130 and change, okay, this is the daily chart of Zillow. This is an ugly, ugly chart. So one would say, well, how would you make money on the long side during this this decline in case you got real lucky real fast? Well, let me show you what happened. And then here's a case for the trailing stops. So here's, let's even forget, here's an hourly chart, okay? The other day, okay, on, I think it was the first, it was the 1st of April at 97.10, a trade alert goes out, okay, by Zillow, okay, 97.10. Where's the low? The low was, well, the exact low was 96.35, but 97.10 is where we issued the trade alert, okay? What happens is the next day, Zillow pops up, and it starts trading over $100. So what do? I issue another trade alert the next day, or trade update, saying Zillow is up over $100. It's up over $3 or $4 for the day. And protect your profits. Either put a break-even stop or a trailing stop, whatever you like. And what I do is I always use trailing stops in a case like that because you never want to let a profitable trade turn against you. That's the cardinal sin. So I put a trailing stop in and got stopped out still over $100. So I was up over $3 on the trade, and look what happened 2 days later. We're at $94.81, okay, basically $95, and the trade alert was issued at 97.10, and we were up at 103. Look at that swing from 103 to 95 in 2 days, okay? I don't want any part of that. That's why we use protective stops, trailing stops. That's why you protect your capital in this business, because it's all you have. Once you run out of capital, you can no longer be in this business. And that's the point I was trying to make with the trailing stops. Never let a good trade turn against you. Sometimes you will get stopped out and the market or the stock or whatever you're in will continue up higher and you'll think you missed something even while having a profit in your pocket. That's not the case. Sometimes you'll win more, sometimes you'll win less, but the idea is to protect your profits and not lose, okay? The idea is not to lose. That's the point, all right? Let's move on. Let's talk about the spider, and we'll go over to the daily chart of the SPY, okay? Let's go over to the daily chart, and here we go. Okay, so the daily chart looks like a blip. We had a little bit of a down day, and we had a very poor closing today. And I want to talk about some of the things that we were looking at yesterday and just see where we are, okay? So, slight down day today, and it doesn't look like much on this chart. This is the daily chart. Now, you have to keep something in mind. I'm going to work, in fact, let me just go over even to a one step bigger time frame. Here's the weekly chart, okay? What does this look like? This is in a bullish position. There's no doubt about it, okay? You have a little ways to go before this turns bearish on you. Basically, it's got to come through the 50-period moving average before we begin to see bearish behavior in this market, okay? So right now, this is in a bullish position, but what you've been doing, okay, since, let's just say, since the beginning of February, you've basically been trading sideways, okay? And you could even make a case way back since the beginning of November, all you've been doing is trading sideways. Up, down, up, down, up, down. All right, so there's nothing going on. Now, when you zoom in a little bit and go to the daily chart, it's the same thing. Here's the sideways action from the last 3, 4, 5 months. Okay, there's really nothing going on. A little bit down, a little bit up, but we're right in between. Okay, doesn't look too bad. Now let's go to the hourly chart, and what we saw today was a little rollover at the end of the day, but here's what you have. If you want to consider this a pivot low and this a pivot high, at least for the short term, hourly basis, okay, what you're looking at, and let's do a Fibonacci retracement just to show you a couple of things. Okay, number one, what you're looking at right now roughly is not even a 382 retrace from the low yesterday to the high yesterday, or the high today. Is this today or yesterday? This is today. Okay, the high today. So you're looking at not even a 382 retrace. It's not out of the question to go down to the 50 or 618 retrace, okay, from this pivot low to this pivot high and then back higher. That's possible. Okay, that's one scenario. Okay, another scenario is we just continue higher, right? Let's go back to the daily, and we just say maybe we put in another sideways day or two, and then we continue higher. Remember, A, B, C. Okay, so that's a possibility. In fact, if you go back to the hourly chart, all right, we have from here we have A, B, and then maybe C, okay? So A, B, C. So there's nothing really wrong with this market, although the close today did look a little suspect. Now let's talk about some other things. What was some of the tells that we saw from yesterday? Well, let's go over to the IWM, which is small cap market, Russell 2000, small business in America. Okay, and yesterday, remember I said the IWM was weaker than the S&P. It was the weak hand out there. It was the weak market. And that's usually a tell. And what happened today? The market was a little bit weak at the end of the day. And the IWM started to roll over first. That's a tell. Here's another tell we talked about. Jump over to the bond market. Look what happened today. Okay, we had an up day in the TLT, which is an up day in the bonds, a little less than 1%. And yesterday I told you that the bottom, there was a daily cycle bottom due today in the bond market. And what happened today? A low was hit in the bond market, and we saw higher prices throughout the day after the low was hit this morning. Okay, when was the low hit? 12:30 p.m. 12:30 p.m., higher prices since then. Today was the low in the bond market on a daily basis, which means there's probably another 2 to 3 days of upside momentum in the bond market. Anybody that watched me last night could have taken a long trade in the bond market today, this morning, early this afternoon, and you'll see higher prices over the next day or two or three. So full disclosure, I did take a trade in the bond market today, and I'm long this market. Okay, it wasn't a trade alert. I just did it in the portfolio because when I have a daily bottom and the market is acting like it is a daily bottom and it begins to move higher, we want to take advantage of a cycle bottom on a daily basis. Okay, so this was a tell from last night. Remember, I said that if we see higher prices in bonds, lower yields, doesn't that normally mean trouble for the stock market, money flowing out of the stock market into the bond market? What happened this afternoon? Okay, let's look at from 12. Oh, this was yesterday at 12:30. This is today at 12:30. So here's the low at 12:30 today in the bond market. Okay, or this period at 12:30. Now let's go over to the SPY on the hourly basis and take a look at 12:30. Right here, 12:30. Okay, I don't know why this stuff always pops up. I'm sorry about that. 12:30. All right, right here is 12:30. Okay, so 12:30 in the bond market goes higher. 12:30 stock market goes lower. Actually, was 100% mirror image of each other. And last night I told you if there's going to be a rally in the bond market, I'm suspect of the stock market. Okay, go back and check the tape. All right, higher prices coming in the bond market. Does that mean lower prices in stocks? Could be. We'll see. Let's go to, and by the way, let me go back to the SPY for a second, the daily chart, and let's just review, what if we do get lower prices, where are we going? So we know that the line in the sand remains 204, okay? This low here. Okay, if this low is breached, something else is going on. But until and unless that does happen, we're going to consider this market in a bullish position. However, 204 is over 30 S&P handles away from where we are. So that's a pretty big down move if we should begin to approach that line. But like I said, we're in no man's land here. Look, we're in the middle of the range. Here's the low end of the range. If you want to scope out the bigger time frame, here's the high end of the range, and here's the middle of the range. So it's a little bit difficult on a daily basis to predict which way the market's going to go, but I can tell you that the market is still in a bullish position. We may have some more downward working off some of this overbought condition for another day or two, but until this low is taken out at a minimum down here, okay, we're still going to look for higher prices. So what I'm trying to say is there's nothing wrong with the market yet. All right, let's go over to gold. So gold did exactly what we said it was going to do. Okay, it's also working off some of this overbought condition. Today it went down a little bit. 1207 I think was the low. You may have another $5 or $10 tops on the downside, but those are meant to be bought. Those pullbacks are meant to be bought because this is bullish behavior. Okay, look, we go up, we pull back. We go up, we pull back. We're going to go up again, and then we'll probably pull back. The next move up should be over this 200-period moving average at about 1240, 1241. That's my target. When will it get going? Within the next day or so, I expect maybe another stall, slightly down day in gold at maybe 2 at maximum. But any day now, you can see gold. In fact, normally what will happen is you'll either wake up in the morning and gold will be higher, or something will happen throughout the day, some kind of peekaboo announcement from the Fed, and it'll send the gold market higher. But all in all, it doesn't really matter what the reason becomes after the fact. All I'm telling you is there's higher prices coming. We may need another day or so to work off some of the overbought condition. That's all. Nothing wrong with the gold market. What else do I have? The dollar. The dollar decided to... and then I'll talk about oil. The dollar decided to have a rally today, and we're looking for this buy zone. So we're going to remain patient. Maybe it goes up into this 20-period moving average. Maybe it just rockets higher. We're not exactly sure yet, but I suspect that we're not done seeing the downside in the dollar yet. I just really want to get it in this window here in order to feel comfortable about buying it. This was like a 5-minute deal to go down to this 95 level. Where exactly was it? 94.76. This happened in like a few minutes. I don't think that's a reasonable test of this low here. I'm looking for some more downside, but whether we get it or not remains to be seen. I believe we will, but I don't have anything definitive saying where it's going imminently. All I can tell you is when it does get into the zone, if it does, we're going to be buyers of the dollar. Let's go over to the crude oil market. Now, there was a lot of chatter today about crude oil and geopolitics and Iran and all that stuff. But reality is remember when I said if we get bust back into this channel and we convincingly close inside this channel, then the likelihood of us going to the top of the channel increases substantially. We got more than halfway there today, and this is in the after hours session. In fact, let me show you the 10-minute chart even. So this is up today, up at 54 and change, and then we rolled over after the close. The oil market closes at 2:30, and then the electronic session starts, and it rolled over a little bit, work off some of this overbought condition, retrace some of this level, right? So we're about the 382 retrace, if I had to take a guess. Maybe in between that and the 50%. Let's check it out. I'm curious. Yeah, in between. Okay, you can eyeball that, and you'll see it after time. So, are there higher prices in oil? Possibly, but, again, how much higher? The top of the channel, let me get rid of this these Fibonacci lines. The top of the channel is going to be my upside resistance for now. But you could also go back down to the lower end of the channel. You can go sideways for a few days and then challenge the top. Either way, you're kind of in no man's land here either way. Net, if you want to know, upside momentum will take us to the top of the channel for now. And the bottom of the channel will act as some level of support around 50.5, $50.60, give or take. So that's where we are in crude oil. I think that's it. Let me just look at my notes. Bond market we talked about. Yeah, that's it. The only other market I want to make mention of is the transports. And if you look at the transports today, the transports were weak. And while they were up today, 41 points, they weren't really up because FedEx had an announcement, and FedEx was up. Let's look at FedEx real quick. FedEx was up $4 today on an announcement of an acquisition they're going to make in Europe. But if we go back to the transports, if you factor that in, okay, and you take away FedEx, the transports were, I think, down or flat today at best. So the point is that the transports are weak, okay, and when the transports are weak, it's usually a good indicator, one way or the other, whether it's strong or weak, of what's to come in the market. Not every time, but when you start looking at indicators like the bond market, the small cap index, or the IWM or the Russell index, you look at the transports, you look at my levels that are support and resistance levels, and you start putting all those pieces to the puzzle together, you start to realize what the expectations are of the market, and that's when you can increase your probabilities of success substantially. So that's why I show you all these indicators. Anyway, I think that's enough for tonight. I think it's been a little bit long-winded tonight. I'm David Frost, mystrategicforecast.com. Thanks for tuning in, folks, for another episode of Common Sense Market Analysis.